Oh, I should make a little news here. So, you've all come, and you may or may not see this, but it's very possible. One of the things I bought, was bought for a different purpose by a different manager months earlier. He bought roughly 15 million shares of Activision, and I never paid. I knew about the company, but I would just see it at the monthly report. But then on January, I don't know, 17th or 18th, something like that, Microsoft announced they were going to buy Activision for $95 a share. Now, when they announced that, at that point, Activision becomes a different kind of security. It becomes what Charlie and I used to call, well, everybody did, 50 years ago, we call them workouts or something like that, and they become known as arbitrage. Well, they're not really arbitrage, but they're securities, they're, in this case, a common stock, whose value depends not on what the market price does, but whether a given corporate event occurs, an announced corporate event occurs. Well, Microsoft wants to buy Activision, we'll say. Well, they said at $95 a share. And they've got the money, and obviously mergers and big mergers, tech companies, all kinds of things, have got all kinds of problems with the world generally in terms of opinion. So you don't know what the Justice Department will do, or you don't know what the EU will do, and there are all kinds of things. But at that point, it becomes a different security. And Charlie and I, 50 years ago, we used to do a lot of that sort of thing. And Gus Levy did it at Goldman Sachs, and we even went back one time, I think, on British Columbia Power, didn't we, Charlie?
Yeah, we certainly did.
Yeah. A guy named Bennett was up there, and we were trying to figure out whether some takeover of the power business. I mean, we spent a lot of time analyzing the probabilities of announced deals going through, and we call them workouts. Now the term became ARB, and it hasn't worked overall too well in recent years. Now, every now and then, I see something that I want to do in that field, but very seldom, because they got to be big. The profit is limited. You know, if they say you're going to get 95, you're not going to get 96, and if the deal blows up, you may have a stock that's at 40 or something. So but we did it with Monsanto 5 or 6 years ago when Bayer was buying it, and we got very lucky because it turned out to be a terrible acquisition for Bayer, but it did go through because Bayer had the money, and they went through with the deal, even though Monsanto came with a problem that nobody really understood the extent of. And we did it with Red Hat when IBM bought it. So, in any event, on January, whatever it was, 17th, 18th, 19th, Microsoft announces it, and the stock, which had been at 60, well, let's see I may have a slide here, which I'll find, but in any event, the stock, which had been in the 60s, went up to the 81 or 2, and that looked like not a big enough spread to me for a few days. And then it settled back a little. So anyway, we now own 9.5%, something like 9.5% of Activision. And if we went over 10%, we would file a report. So in order that the news people don't feel that there's no news there, I can tell you that as of yesterday, we own about 9.5%. If we go past 10%, there'll be a form filed with the SEC and so on. But it is my purchases, not the manager who bought it some months ago. If the deal goes through, we make some money, and if the deal doesn't go through, who knows what happens. But I just want to be sure that if we do file that report, people understand very clearly, because there's been some very mixed up stories on that in the past. We want to be very clear that it was Warren Buffett's decision in that particular case, and he doesn't know what the Justice Department's going to do. He doesn't know what the EU is going to do. He's never talked to anybody in Microsoft about it or anything. He's just read a document. He's made his own assessment, and it can change. And at one time, I think we sold a few shares even when I thought it was a little higher than it should be. It turned out those sales were not bad sales. So I just want to create a little news for you, and I want to, if possible, head off stories which have been incorrect in the past, and which then get picked up by other media, and corrections never get written. That all the corrections were written by one inaccurate story, and they apologized even to me. Both the reporter and the editor sent me a personal note of apology. And they didn't expect to make a mistake, but when the other publications picked up the story, they didn't bother to pick up the correction, and millions of people were misinformed, and probably literally by the time it gets spread around. This one I will attempt to head off by telling you exactly what the facts are right now, and we'll see whether we go beyond 10%. But if, it could easily be that if it went up a few dollars, it's still a $95 deal. It's still, we don't know what the Justice Department will do. We don't know what the EU will do. We don't know what 30 other jurisdictions will do. One thing we do know is Microsoft has the money, so that takes that one risk out of it. So anyway, Charlie, do you have any news to break?
No.
Yeah, and incidentally, I don't talk this over with Charlie. I mean, he knows what that occasionally I'll see an arbitrage deal and do it, and 50 years ago we were doing it together, and his general feeling is, why is Warren fooling around with this kind of stuff even? But it's the old fire horse. But occasionally it looks like the odds are in our favor. But absolutely, we could lose money on that company, and fairly large sums of money, depending on what happened if the deal blows up. And there will be a lot of people that want the deal to blow up. But Microsoft doesn't want it to blow up, so we'll have to see what happens. Okay. Enough. Becky.
Charlie just mentioned index funds in passing, so let's go to this question from Matt Feigl. His question is related to the growth of passive investing through index funds and ETFs. He says, passive investment vehicles now control upwards of 50% of the United States stock market. The actual owners of these passive investment vehicles decided passive investing makes the most sense for them. Yet in doing so, passive investors have empowered the large index funds to become the biggest activists in the market. These passive managers now enjoy enormous, and I would argue undue, influence over corporate governance. Do Warren or Charlie see any benefit or logic to a rule that would prohibit passive investment vehicle managers from voting the shares they control for their passive investment clients?
Well, I'll take that. I think the guy's right. I think the thing is out of control and counterproductive. And I don't think it's good for the country to have 3 passive investors with bright young men from Harvard or what else telling them what proper governance of corporations is. It's not a good development. And it is, and I think indexing, if it gets to 90%, then it won't work very well at all. But at the moment, it's worked fine.
Yeah, well, the one thing you can count on, too, is that if it does look like it's going to, if the public opinion shifts over to the idea that it really is a good idea to let 3 people decide the fate of every company in corporate America, the 3 people, and they won't collaborate or do anything. none of they're evil people in the least. I mean, they're just doing what you and I would do. They would figure, we don't care that much about voting. What we do care about is keeping a lot of assets under management. So we'll figure out something that ends up reflecting public opinion, and then politicians won't get mad at us. And our only threat really is the politicians get mad at us and regulate us in some ways. So we'll head it off. And I would predict fairly confidently that if the American public doesn't like the idea of three people controlling things, the three people and their organizations and everything, but what they want to do is they want to get bigger. And they wouldn't be where they are in life if they hadn't wanted to get bigger. Those things don't happen by accident. That doesn't mean it's the only thing they want. They want their investors to get good results and everything. But they are certainly not going to follow a policy which is going to cause a backlash that causes them to be a lot smaller then. They can figure out their self-interest. I mean, and it just so happens that in this case, it would achieve the right result, which is that they would not control America, but they'll do what's good for themselves, and what they have to do, what's politically acceptable. The only thing that really can mess up what is a very good deal for them is to have Congress change the rules, and the rules were the Investment Company Act of 1940 really changed how people behaved, and it's governed things in a big way for a very long time, and anybody that takes on the federal government loses. And if you're talking about trying to do that sort of thing, and they don't need to do it. They just say, well, we'll give up voting, or we'll vote our shares as the rest of people do. And of course, if you vote your shares as the rest of the people do, then if the index funds had 90% of the country, you could take over a company by somebody else buying 3 or 4% because you'd automatically get the funds to follow your very small little percentage. You'll see it all play out. I mean, it's a big case, but it's not an unusual case. Okay, station 7.
Eric Erda, and I live in Albuquerque, New Mexico. So I want to first say thank you so much for a lifetime of knowledge you have both graciously shared with all of us. You've contributed greatly to push our species forward. Moreover, you've taught all of us here, along with many, many millions not here, how to behave more rationally, treat one another with more love, and lead more fulfilling lives. And for that, I want to say a very sincere thank you.
Thank you.
As for my question, I want to ask about Berkshire Hathaway Energy and the unique structure that has evolved there, given that Berkshire doesn't own 100% of the company. The first part of that question is related to Greg's ownership and his corresponding incentive alignment with overall Berkshire. Now, there's a wise man named Charlie that in 1995, at a speech to Harvard, taught us how important incentives are to human behavior. I would conservatively say that Greg's stake in BHE is worth more than $500 million at present. And I'm curious if you can share any plans that you have to convert his Berkshire Hathaway energy ownership to Berkshire stock. And if there isn't a plan to do this, can you please explain why we shouldn't be concerned about Greg's incentive structure going forward? The second part is about leverage at the entity. You have always said that BHE operates with an appropriate amount of leverage given its earning power. With that said, it's still a very, very large debt figure in relation to current earnings, especially with what we have become accustomed to at Berkshire. And I'm curious, if Berkshire owned 100% of Berkshire Hathaway Energy, would you still operate the business with the same amount of leverage?
Okay, thank you. The second part is the easiest one to answer, so I'll take that. And I'll throw the first one back to Charlie. But the Berkshire Hathaway Energy actually is required with its regulated utilities, and it basically started pretty much with regulated utilities, and still is dominated by that, and we're interested in buying more regulated utilities. It's required in different ways by different states and by different regulatory authorities to have a large amount of debt, because the regulatory authorities will say in Iowa or to pick any state, the regulatory authorities are going to say you can get debt money cheaper than you can get equity money, which historically has largely been, almost always been true. And they say that since we're going to allow you a return on equity, we'll say, just pick a figure, but let's say they allow us a return on equity of 9%, and we can borrow a lot of capital at 3%, they say it'll result in higher rates to customers if you use it, put in all equity. We would love to have all equity in our utilities, but we wouldn't, the regulator wouldn't stand for it, because it would result in, under the traditional system, it would result in higher prices to consumers. So that's built into the system. And we would, well, our regulator wouldn't allow us essentially to get the same return on equity and have an all equity structure. The answer is, we put, well, you actually saw in the film earlier, which the people that are listening or hearing the webcast didn't see, but just in Iowa, we recently got approval to spend $300 billion, but they want us, Iowa has a history in, like every other state in the union, except Nebraska, which is all public power. But every private powers, they have a history of wanting X percent to be in debt. They want you to raise a lot of money in debt because it's cheaper, means cheaper power for the consumer. So the answer is, if we owned 100% of Berkshire Energy, we would absolutely be following the same. We would be operating pursuant to what the utility commissions tell us they want us to do. That they represent the people of those states. Now, Charlie, do you want?
Well, the other one's simple too. It's a historical accident. It's not causing any big tension or breaches of fiduciary duty. We had the same problem with Walter Scott, who was a director for years and years, and owned stock in the same company, also an historical accident. I just don't think it's a big problem at all. I see no behavior from Greg ever that isn't in the best interest of Berkshire.
Yeah. And we've had various percentages of Berkshire Hathaway Energy ever since we bought it in around 2000. And it happened, my sister who's here, we were at her house, and there was a party going on, and 20 or 30, probably 30 people. And Walter said to me, if you got a minute or two, I'd like to talk to you about something. So we went in the library or someplace, and Walter says, we've got this company and it doesn't seem to fit the public mold very well, and would you want to buy in and go private? And I said, sure, depends on the price. And when we got back to Omaha, I was out on the West Coast, we got back to Omaha, and we met with David Sokol, who was the big holder, aside from Walter. And we agreed on a price. And I remember Walter saying to Dave, "Don't negotiate with Warren. He'll tell you to forget it and he'll do something else." And so we bought it. And so it was kind of a weird structure from the start. And we had a public utility holding company act to deal with and all kinds of things. And it's evolved. And it now has us with 91% roughly, and it has Walter's estate, and I don't know where that goes at all. And Walter never talked to me about it, and I never asked him about it. But it's one way or another interest connected with him, and the estate now, close to 8, I guess. And Greg's got 1. And the from our standpoint, if we made a deal with if they ever came to us and the Scott interest wanted to do something, we'd say fine with him. We'll do the same thing with Greg if he wants to, and he probably would want to. I mean, but from our standpoint, I've never seen any decision remotely. If I thought that would make a difference, he would not be. He just wouldn't be the right kind of person to run Berkshire. And the problem, of course, is that you've got lots of process that can be involved with insiders and everything. And I've got no interest in, as long as I'm alive, my interests are 100% with Berkshire. And the board wouldn't probably, and to some extent, a little reluctantly, but they just say, well, if Warren thinks the deal's okay, it must be okay, which is true. And so I could make a deal with anybody and it doesn't get all messed up with process. But on the other hand, if I'm not around, the pressures are to directors to do whatever the lawyers tell them to do, and the lawyers tell them to do this and that, and then they want to bring in investment bankers to make a value. And the whole thing is a game from that point forward. And it's expensive. It takes a lot of time. So it would be better if it happened while I'm alive and around. But there's no reason. We'd rather have 100% than 91%, obviously, because more earnings for Berkshire. But there's no reason to try and do anything with either the Scott interests or Greg, unless they want to do it. And the logical thing is if anything happened with the Scotts, we'd certainly offer it to Greg. But who knows what happens in the future. The one thing I can guarantee you, Berkshire Hathaway holders will never be taken advantage of, and you can sue my estate or something like that if anybody felt differently about that. It isn't going to happen. But it's a lot easier if it's done while I'm around, actually, than if it's done later. But
I wish we had 20 more conflicts of interest just like it.
yeah, that's exactly true. Yeah, it's a perfectly logical question. I mean, but it is not a problem, and any answer that's arrived at will be good for all concerned. And right now, I've got no feeling that I have no knowledge at all of where the stock that the Scotts have goes, or how they feel about it, or anything, and that's up to them. Walter was our partner, and as far as we're concerned, we treat anybody connected with them as our partner, and they know that. They don't have to worry about us taking advantage of them, and we can understand if they don't do anything, we can understand that. If they want to do something, we can understand that. It's a good question, though. Thank you. Okay, Becky.
This question comes from Steve Blackmore in Bozeman, Montana. This is to Charlie. He says, in the past, you've made favorable statements about investing in China, in part based upon valuation metrics. What is your opinion now, and how much weight do you put on the actions of the government in your analysis? Do the recent Communist Party activities in China, including human rights violations, blatant cyber theft from US companies and others, crackdowns on speech from business and media, et cetera, cause you to change your opinion on investing in China? And how do you evaluate the clear dangers of investing under authoritarian regimes, as recently evidenced by Russian atrocities in Ukraine?
Well, those are good questions, and there's no question about the fact that the government of China has worried the investors from the United States who invest in China more in recent months and years than he did in earlier periods. So there's been some tension, and it's affected the prices of some of the Chinese stocks, particularly internet stocks. Just in the last day or two, the Chinese leader has sort of reversed course on that and said he went too far and he's going to pull way back and so on and so on. So we're having some hopeful signs. But yes, there are more difficulties of dealing with the regime in China than there are in the United States. And it's different, it's a long way away, and they've got their own culture and their own loyalties and so on and so on. And the reason that I invested in China is I could get so much better companies at so much lower prices, and I was willing to take a little political risk to get into the better companies at the lower prices. Other people might reach the opposite conclusion, and everybody is more worried about China now than they were 2 or 3 years ago. So that's just the way it is.
I have nothing to add. Okay. Station 8.
Hi, Warren and Charlie. My name is Tom Ringe. I'm from Wayne, Pennsylvania. It's great to be back here after 2 years. Thank you very much.
Thanks for coming.
In this year's letter, you talked about insurance float, the evolution of float, the per share float, the effect on repurchase to increase the per share float. And in regard to the repurchase, I would say thank you as your partner for your careful repurchase as well as careful issuance of our shares. My question is about your expectation for the likelihood that float will be stable and the cost will be zero or close to that over time with adverse years from time to time. What about Berkshire's insurance businesses give you the confidence to make that statement when your competitors are trying to do the same thing but haven't been able to come close to achieving Berkshire's record in cost and growth of float? Thank you.
Yeah, well, they really aren't trying to do the same thing, which is kind of interesting. The answer to your question is we wouldn't be in the business unless it was my judgment that the likelihood, the weighted probabilities are higher that the flow will be useful to us rather than costly to us. And nobody will know the answer to that for a very long time. So far, so good. But it is a judgment, and absolutely I could be wrong about it. But you know, I think both Charlie and I would say that we think the odds are that it's a winning bet, and the odds are pretty good, and that we're quite well positioned to do it if anybody does it. But, you know, did we know 9/11 was coming? Or, you know, I mean, it is not a sure thing.
Just think of what the potential is, though, when you're reviewing it. if we could buy common stocks we were virtually sure would give us 8% after taxes with our whole float, that would be a hell of a lot of money.
Well,
How
it'd be
many
11
people-
billion. I can tell you what it'd be.
And,
11 or 12 billion
yes, it's an enormous amount of money.
annually.
Yes, and the float has been growing, so relax. We're glad to have the float.
But Charlie stuck in a couple of ifs there. If we could earn it, and if we could, the answer is, that it's our job, and we think we can do it as well as anybody, or we wouldn't be doing it. But it's our job to figure out what businesses we want to be in, and when they don't make sense, reluctantly, occasionally, to give up on them, like the textile business. But those are the hard decisions, and insurance. We didn't have the faintest idea back in 1967 when Jack Ringwald stopped by the office at he stopped by at about 11:45, and Charlie Hyder had set him up. And Jack, about once a year, he'd get mad at the regulators. He just didn't like being regulated. And he'd say to himself, I'm going to sell this damn thing. And Charlie caught him one day, and he said, Jack is in the heat. I said, bring him around. So he came up, and 11:45, and Jack said he wanted to get rid of this damn business. The regulators were driving him nuts or something. And I said, fine, I'll buy it. And I said, what price do you want? And he said, I think $50 a share then. I said, fine, we've done it. We don't need an audit. We don't need anything. And then Jack started, and he says, immediately, he really changed his mind, but he was too honorable to back out. So he said, I suppose you'll want me to sell you the agencies. And I said, no. And of course, if I'd said yes, and then he said, then we can't do it. So I just said, no, yeah, keep them, Jack. And he said, I suppose you'll want me to do this. I said, no, I won't want you to do that. He was hoping I would just give him an out. But after doing that for 15 or 20 minutes, he saw that I was going to agree to everything he said, and he said he'd sell it to me at 50, so he followed through, and that was that. And, it was pure luck. And
But
Jack,
Ward, we really like our float, don't we?
pardon me?
We really like our float.
Oh, yeah.
We're not worried. We love it.
No, we made the most of it, but we didn't make the most of it till Ajit came along. And, who knew that the guy was going to walk into my office in 1986 and I would decide that he was the guy to make this damn thing work that I hadn't been able to make work the way I wanted it to. And who knew that Geico would come along later, and who knew it? There's just all kinds of things. The one thing you have to do is be prepared. When opportunity comes, you really do have to just move. And fortunately, I operate in an environment, and I wouldn't operate in any other environment. I get out of there, but I operate in an environment where I can do it. And it'd be crazy of the board to say, we want to set up a committee to review every acquisition and all that. And I would say that's fine, but you can work with somebody else, because I just don't like to go through all that stuff. I've got other things to do the rest of my life. There's so much luck, but there is that. You do have to be mentally prepared and to do something when it makes sense, and do it big time, and do it instantly. And then you got to be sure you've got the resources to do it. And
The relative absence of bureaucracy at Berkshire
unbelievable.
has made the company a lot of extra money for a very, very long time.
And it's made my life happier.
And yes, but that's ideal.
But in the end, we are extraordinarily well positioned to do exactly what we want to do with float, while at the same time never putting ourselves in the position, never coming close to making a promise we can't keep. We had two small insurance subsidiaries well before Ajit. Two companies I'd bought. One I really didn't know that much about. The other one, I did it all by myself. And they were disasters. And left alone, which they could have been, they'd have gone bankrupt. And we just didn't want to do it. So, we could pay the liabilities and if the parent company got involved, or we put it in another insurance company or something. And we did it. I mean, Berkshire, in a crazy way, I look at Berkshire as a painting, and it's unlimited in size. It's got an ever-expanding canvas, and I get to paint what I want. And if somebody wants to paint something else, then I'll go someplace, and I'll get a smaller little thing, and I'll paint away. And I actually, I'm no good. I don't know anything about paintings. Take me to an art museum, and all I really want to know is where the men's room is. But I'm just not interested. And other people look at paintings, and they see something, and then they see something additionally later on. And I mean, they really have a different sort of perception ability in relation to that. And to me, Berkshire's a painting, and I get to paint. And the object, obviously, I want my partners to come out well in it, but the real thing I like is the painting. And as long as it's in my head, and I see different things in it as I go along, and it's the closest thing I can come to enjoying myself every minute of the day. and it's not, I don't prescribe it for other people. And occasionally not so occasionally, but I see things in the painting, I think, well, I should have done that differently, and I go back and paint it over, and it's satisfying. And who knows why human beings react in that manner, but I do know what makes me happy and what doesn't make me happy. I found what makes me happy, so why in the world would I change it? So that's a short answer to a question that I can't remember what it was. Okay.